This is your definitive guide to what to expect an earnings season. That's right. This is what a lot of these companies are going to be faced with. We've heard about this term disinflation a lot, right? Basically, it's just the lowering of prices. We've seen prices come down overall when we talk about, not all prices, but we've seen a lot of different prices come down with respect to food or gas or et cetera, right? And obviously, it's because the Fed has been raising rates at such an enormous rate that we thought was actually going to tank the market, but somehow or another, it ended up working opposite as we look at a day where new highs are being set, not quite, new 52-week highs, right? I think. Not new highs overall in equity markets, but again, NASDAQ is up to 16,000, and the S&P 500 futures are at 4587, almost at 4,600. So as a result of the fact that the Fed declaimed war on inflation and they went after it. I mean, they really did. I mean, 10 straight rate hikes is impressive. It's one of the fastest rate hiking campaigns we've ever seen. And inflation has come down markedly, right? June last year, it was at 9% for CPI. Just recently, we got a reading of, I think, around 3.1% for inflation. So things have changed a whole lot. Is there more to go? The Fed's target has always been 2%, right? And conceivably, we could probably reach that by the end of the year. Does that happen as a result of the Fed not raising any more rates and we just staying higher for longer? Is that going to be okay with the market? These are the things that companies are going to have to answer. How has disinflation affected them? We know how inflation affected them. Previous quarters and a year ago, we were hearing a lot of companies talk about inflation and how it was affecting their bottom line and things like that. Now, are we going to hear that things are a whole lot better for them? Does that mean they're going to be better? Should we expect all the companies to be trading higher because inflation has ceased and so they're in a good spot? That's the thing I wonder about. Or how about this? Artificial intelligence, right? Just about all the companies that we know that have mentioned it, their stock price is probably, on the average of 20% higher. Just taking example, Microsoft today. Microsoft mentions that they're going to be coming out with a few new tools that are AI inspired, and they're going to be charging a little bit higher prices for them per company, $30 per company, basically, right? Liftoff. I mean, absolute liftoff in the stock. And you could argue that that move in Microsoft today basically pushed equities higher. So clearly, there is something to this AI stuff, right? Like, it has been one of the bigger things on our year. But how much can we expect to hear about that? And what's it going to be? Is there any company that's going to mention AI and not do enough? Like, is it going to be a point now where just having AI is not enough, right? I mean, remember for a while there, streaming was a big deal, right? And every time somebody was going streaming, it was like, oh, this is the next thing to jump on. When Disney became somewhat of a streaming company, it became a company that a lot of people jumped on. And then things changed in the land of streaming, right? All of a sudden, especially last year, we started seeing streaming companies weren't doing enough. We started to see things shift away from streaming, and the numbers weren't as high. And so the metrics behind AI is about to become a big deal. It's not going to be just enough to mention the fact that you have AI. Now you're going to have to start having metrics or have a number behind it, like we see in what's going on with Microsoft, right? They're actually putting a number behind their AI metrics now. And so I think at some point NVIDIA is going to have to do that. But NVIDIA makes chips, right? So they can say XYZ amount of chips were processed and used for AI intelligence, and this is how many we've manufactured over a short amount of time. I think it's about to happen soon. Like, these companies are going to have to find a way to get some numbers and metrics behind AI. You can't just say AI, AI, AI. Your whole call could literally be that, right? Like, you come on and be like, look, in AI, we've done AI and AI and AI and AI and AI. AI, AI, AI. You could do that, but that won't be fun. But it might actually work. Who knows? I think you're going to have metrics going forward. I think you're going to have metrics. Finally, the consumer has been really resilient. Retail sales, except for this one, have mostly been good, right? Despite the fact that you have credit card rates at 22%, and arguably a lot of people are carrying balances right now. That's just not what I think. That's actually happening. Most banks are saying that. As a matter of fact, that was one of the main reasons I think Citi had pretty decent earnings, because of what's going on in their consumer lending area, right? You also have really high mortgage rates. A lot of people out there have a 2 and 3% mortgage rate, and they're not budging off of their house. They're not selling their house, because if they do, they're going to have to roll into a different house with a 7, if you're lucky, maybe 6% interest rate. So interest rates are really high, especially when you're looking at houses these days, and that's going to be a pretty healthy monthly payment. And so despite all of that, consumers have been fairly resilient. But how long can it last? Can we continue to deal with higher for longer? And that's exactly what we're going to deal with. I mean, interest rates are going to be higher for longer. The Fed has pretty much assured us of that. So can we last through that for some time? Or is there a breaking point at which the consumer is going to have to say uncle? And are we going to see that show up in GDP? Remember, consumer spending is 2/3 of GDP. And GDP has been strong. As a matter of fact, we get our first reading of the recent quarter GDP coming up next week, along with the Fed meeting. But you wonder how long these things can last. And so these are all the things I think we're going to hear about the most on earnings calls. Them talking about how the disinflation in the economy has affected their bottom line. For those companies that do artificial intelligence, you're going to have to start putting some metrics behind it at some point in time. And eventually, with consumers, how much are companies passing off their costs to consumers? These are all the things that we're going to be hearing about for earnings.